Hello again and welcome back to London. There was no rate hike in June from the Fed, but when it does come, what would it mean for equities? Well, I've been speaking to Augustine Eden from Accendo Markets. Gus, it's difficult to make broad conclusions for all equity markets, but the Fed rate is going to have a large global impact on all markets. What's the bull and the bear case for a rate rise and its impact on the equity markets?
Right, so, well, it's difficult to say. There are obviously cases to be made for both. The Fed raising rates is obviously going to strengthen the US dollar, could have an impact on commodities that are denominated in dollars, so things like gold, silver, etc., oil, they're going to be impacted. That can have, that's obviously going to increase costs on companies that purchase those commodities. So this could be potentially bearish. On the other hand, it could be very bullish for markets whose main components are producing these types of commodities. You know, on the other hand, we've got the sort of bullish side of it could be that a rate rise in itself is a reflection of a healthy economy that's growing. You know, people are going out and spending more active. Inflation's going up, so that rates have to come up to bring that back into line. So it's difficult to know really, but there's all sorts of stuff going around at the moment. You know, the Fed are really enjoying reining in optimism, and they're sort of going every which way. They're saying that any rate rise should be data dependent, which is giving them a lot of wiggle room to sort of say, right, okay, we could raise rates in September. Oh, hang on a minute, you know, the macro data hasn't been as good as we thought, so we could put it off till 2016. They're saying it'll be 2015. It'll be really interesting to see what happens. Yeah,
interesting what you're saying there about the impacts of the strong dollar on commodities. We know the commodities are very important to the FTSE. So if we factor that in, as well as the fact we could see a rate rise in the UK shortly after the Fed, does that mean that the outlook for the FTSE is quite bearish?
Certainly, at the moment, the FTSE is struggling, and it's really, let's face it, Greece is right up there. It's all but eclipsing most other things. When it comes to interest rates, the more dovish Fed meeting yesterday has really benefited the FTSE's two big gold miners, Fresnillo and Randgold Resources. It's boosted the gold price. It's boosted them. You know, they're up sort of Fresnillo, I think, something about 3% this morning. So this is bullish at the moment. What really matters is the mechanics of a rate hike. So the Fed aren't going to come in and say, bosh, there we go, 5% straight away. They're going to do it very, very gently because they don't want to shock the markets. And so the rate at which they raise rates, I mean, it's not that important when they start raising rates. What's important is how they do it. Yeah. And the markets have been given some confidence that it'll be very, very slow. You know, it could be over a number of years and in tiny little increments. So it doesn't need to be bearish for markets.
And what does history tell us in terms of how the Fed's going to send that message? It's almost been painstaking watching them carefully lay out what they're going to do. So how do you think it's going to be signalled from Janet Yellen?
Well, they're not too willing to signal anything with any certainty. So it'll be very interesting to see just how much certainty they put into it. I mean, obviously the timing of the first rate hike will be very, very important, and the amount by which they do it will be very, very important. Who knows how Janet Yellen is going to put that into her rhetoric? To be honest, they're keeping people guessing is the game that they're playing, and I don't see them convert to any other strategy until the very, very last moment, really. But as I said before, markets won't like to be shocked, so who knows?
Yeah. Let's just finish off with some tradable advice in terms of the FTSE. What key levels do you see when you consider that we've got Greece lingering and also we've just had this Fed meeting?
Yeah, certainly. Well, as I said before, the Fed, it's hard to attribute movements in the FTSE or any index really directly to the Fed. I think Greece is really overshadowing everything. So when something happens with Greece, you know, we can all, every single week we say, oh, when something happens with Greece, and it just carries on and on and on. It's certainly getting to D-Day now. Will Greece leave the Eurozone? If they do, will we see a sort of relief bounce from the markets as they sort of shrug off Greece and move on to other things and push higher up to above 7,000? You know, it hasn't managed to hold above 7,000 at all recently. So that's one scenario. If Greece stays in, will we also see another relief bounce? That's unlikely, because if Greece stays in the Eurozone, there's still the matter of its huge debt and how that's going to get sorted out. So we're quite confident that that there'll be some form of optimism come back into the markets soon. So over 7,000 for the end of 2015, really.
Well, that's all for the moment. Stay tuned for more interviews and analysis, but from a very sunny London, goodbye.